Good morning, this is Jack Charting the Markets, and this is the pre-market webinar for the morning of Tuesday, the 14th of April. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take somewhat of a learn from it, transfer. I'm not here to shoot trading signals. This is a video for paying subscribers at chartingthemarkets.substack.com. Hey Doug, it's published on YouTube after a delay of 24 hours. All right, we saw a pretty decent move up yesterday, and this actually puts a load of our stuff in range, and it also means that we're not seeing the immediate very negative reaction to the failure of the talks that I was thinking we might see, and we're not seeing either the big move up in oil that really seems just a matter of time unless peace talks really get off the ground. We're in a major oil crisis. I'm going to pull out the best video to watch on this and link it for you tomorrow morning, I think. But this is a major oil crisis. It is starting. It's kind of like COVID, but without the pandemic. It's starting off seriously in Asia. It's going to spread to Europe, and then lastly, it will get to America. At the moment, we're seeing a major supply shock in terms of the amount of oil that can come through the Strait of Hormuz, and it doesn't really matter whether the Iranians have closed it or the Americans have closed it. The fact is, whether it's open or closed is what's important here. And at the moment, we are working through a whole load of reserves, and the impact is cushioned as a result of that. But at maximum, that's going to last till end of May. So potentially we could mess around until then, but after that, realistically, oil's going up to over $150 a barrel, and it may well, depending on the just extent of the squeeze, it may well go well over 200. There is a major shortfall in the amount of oil reaching markets because of the Strait of Hormuz, and unless there is, this could all go away if peace breaks out. And actually, even if the Iranians still have control of the Strait of Hormuz, as long as the traffic is actually getting through, then the oil shock or much of it could be avoided. But there's also a big lead time on this. Basically, from a tanker to getting from the source to the market is like 30 days. So really, we when we're talking about the end of May, for this, really, the Strait of Hormuz needs to be open to traffic and pretty free-flowing by the end of April. Now that, to be honest, looks like a tall order from here. We shall see. But if the market is going to ignore this for the time being, that does give us an opportunity, and I'm going to be talking about this on the bigger picture charts, to go and retest some all-time highs, which I have to say seems insane, but nonetheless, could be a possibility and would set up some really, really nice reversal patterns if we do see it. So in the short term, we had some Audi sell signals fixed on the bigger picture. I'll show you two of those failed yesterday, particularly the ones on SPX and the Qs failed, and it may be that the other's going to fail too. In terms of the IHS that broke up here on on ES, we've got a target on that in the 69.75 area, and obviously that is now in range. On NQ, we've got an IHS broken up with a target in the 26.050 area, and that too is in range. And at the moment, the market is shrugging off the all bad news. And actually, I was talking to a friend of mine yesterday, and he was saying, "Oh well, aren't the Iranians completely?" The F was destroyed, the Navy's destroyed. What really matters in an asymmetric war, really in this asymmetric war, is missiles and drones. And the Iranians are not obviously short of either of them. And in terms of Trump, has basically been saying every 4 hours for a month that the Iranians are desperate for a deal and desperate for talk, but desperate to talk. But to be honest, there's very little coming out of the Iranian side suggesting that might be true. And really, they've got a big advantage. They can shut down the Strait of Hormuz. They can cause economic havoc with it, and they're sitting down and they are waiting. So we will see how that develops, but I suspect it's not going to develop well. I'm going to get a couple of resources for you to have a look at so you can see more of what I'm seeing here. In terms of YM, we had, this was actually the weakest yesterday. We've got a double bottom that's broken up in the 48,970 to 49,400 area, but again, that's not too far away, and if the market's in denial, then we can go higher. We can make the IHS target on double bottom target on RTY, 2733 to 2740 area. All of these are looking as though they might be on the table because we saw a big day up yesterday. And actually, in terms of, if you ignore the underlying situation with Strait of Hormuz and Iran and so on and so forth, we do actually have a bullish leaning week this week. We've got bullish, every day leans mildly bullish except for Friday, which is OPEC, which leans fairly strongly bullish. We will see. But could this go higher and make these targets? Yes. Could it go even higher than that? Yes. DAX, no current negative divergence really on any of these. Gone a bit higher on DAX, gone a bit higher on ESTX. And we are getting close towards the IHS target, Nikkei as well, in the 59,000 area. All right, let's have a look at the bigger picture charts, where SPX, obviously we're up at the daily upper band, and this is really day three of a daily upper band ride. We are not that far away from the all-time highs here. That's only 100 points above. That is not an awful lot in this market. In terms of the hourly chart, we had an RSI 14 sell signal fix. We had an RSI 5 sell signal fix. The RSI 5 one just about survived the day yesterday. The RSI 14 sell signal did not. Seeing these fail is unusual, but it does happen occasionally, and it has happened here. And that may well mean that we are going higher, and it's opening up the path to go higher. In terms of the IHS on SPX, that's got a target in the 69.12 area. We got within 30 points of it yesterday. In terms of the Qs, again, above the daily upper band, and we are within reach, potentially, of a retest of the all-time high, which, again, is not far above. I've got that at 635, and we made it up as high as 627 or so yesterday. On the hourly chart, we had a possible RSI 14 sell signal brewing. That failed, and we had an RSI 5 sell signal fixed. I think that just about survived the day, but we may well be about to lose that this morning. We've got an IHS which broke up with a target in the 7.5 area. This wedge that I drew in has broken up. This could be a bearish overthrow, but it doesn't feel like one really. And we've pretty much made it now to the IHS target and the 67.5 area. Looking at Dire, where once we retest this high, we will actually have some negative divergence on the daily RSI 5. We've got an RSI 14 sell signal fix, which survived the day yesterday, and the RSI 5 sell signal had already made target. In terms of the pattern to the upside here, we've got an IHS which has broken up with a target in the 486.25 area. We didn't make any more progress towards that yesterday because obviously we haven't retested this high here at 483.27 yet, but we are pretty close to that. And at the moment, if the market is not responding negatively to the lack of any meaningful negotiations, that is potentially doable. IWM, we are above the daily upper band. We've got an RSI 14 sell signal fix and an RSI 5 sell signal fix. They didn't fail yesterday, but again, you can see we are not that far away from a retest of the all-time high. And actually, this head and shoulders that failed on the move over 257.19. So technically, I would normally expect to see a retest of the all-time high with this one, and we could see that. In terms of the double bottom that broke up here, we got target in the 266 to 268 area, and the high yesterday was at 265.36. So again, we are very close to that target. I'm wondering about high retests here, and if the market's sufficiently undeniable, that could be doable. If that is doable, then we can get set up a series of very nice looking double tops on SPX, Qs, and IWM, and possibly be left with a head and shoulders here on Dire, but we would see. All right, great. Let's have a look at the DAX and the Nikkei. DAX, we are over the daily middle band, but Europe's going to get hit for the Americans first in terms of an oil crisis here. So seeing a bit of a retracement here, haven't got back to the highs yet. Nikkei, I'm wondering about a retest of the all-time high. possibly set up the second high of a double top. Now, obviously, the Asians are taking the brunt of this oil shock first, so I'm a little skeptical, but at the moment, we're not seeing much sign of weakness. All right, great. Let's have a look at DX, and we've got an opportunity, if the market is in denial about this oil shock, to go and make this double top target. I've got that in the 96.76 to 96.99 range, and that is potentially doable. And USD, we've got an IHS which is broken up with a target in the 1.1875 area. Again, that's making good progress. Not a lot to see on the other currencies here. We're seeing continued rally on GBP. A bit more downside as we form what kind of looks like a bull flag on USD JPY. USD CAD pulling back again, could be a bull flag. USD Australian dollar, this head and shoulders has now failed. I failed on the break over the right shoulder here, so normally I'd be looking for a retest of this high here up in the 71.90 area, and we may well see that. NZ, not really doing anything particularly recognizable at the moment. Right, ZB, if the oil crisis comes back in full force, I would expect bonds to go down heavily, but it hasn't, and we are just trading around sideways at the moment. Looking at ZN, this looks like a bear flag forming, and probably is, but it could go higher within the flag. Coil, I'm surprised to see this down at 98. The physical prices on the barrel head are over 150, I understand, but at the moment the futures are a long way behind those, and obviously if the crisis ends, then we may not see a huge oil spike. But as I said, there are constraints here. And this can only last so long. CL back down under 100 at 95.90. HO pulled back a bit. RBOB pulled back less, but slightly. NG has gone and broken my trend line in the 2.63 area. But as I was saying, in the absence of this being affected by all moves, the obvious trend that we were on was lower. All right, looking at GC. GC, I've got an IHS here which is broken up with a target in the 51.11 area. Still thinking that might make target, but I've got to say I'm looking at this on silver, which is a decent looking rising wedge. And I'm wondering whether this is a bear flag setting up a retest of this low. Looking at palladium, not as nice a bear flag, but definitely could be one. Platinum, again could be a flag. We've got a weak 6-minute sell signal fixed there overnight. Did we have one of those? Yeah, and we had one of those on palladium as well. Looking at HG, we have gone higher. Could be heading for a retest of this high here at 615. We've got a possible weak 6-minute sell signal brewing, hasn't fixed yet. All right, looking at the others, KC. KC, we've got a likely bear flag forming, I think. Sugar, little level bottom here, 6-minute buy signal fixed. I think we're going to see a rally back to the weekly pivot at 1436. CC, this still looks like a bearish triangle, but it could expand into a bear flag. CT has gone higher, and we've now broken up the double bottom there. I will have a post out today talking about the bottoming setups on CT, on ZW, on ZC, and on soybeans. Looking at lumber, may well be resuming the downtrend on wheat. We've got a little IHS forming here, and I'm thinking this might be about to turn back up, but the weak 6-minute buy signal has already reached possible near miss target. But we could have a right shoulder here, setting up a move towards the top of what I think is overall a likely bull flag. On corn, could be bottoming out here too, hasn't broken up over declining resistance yet. On soy, I think we're forming an inverted head and shoulders right shoulder here, and I think what I'm going to be talking about in the post today is that really I think we've probably locked in a lot of the gains here certainly on wheat and corn, where the amount being sown has been considerably lower because of the disruption in fertilizer prices, big spike, difficulty of getting hold of fertilizers. So I think we may well actually have already done the damage, which will cause these to go up. These aren't huge moves, but I'm going to be talking about those today, and I think they're probably going to happen over the next few months, whatever happens now. On ZL, keeping an open mind, possible double top here, but I'm really not expecting that to play out. Live cattle has continued higher, and lean hogs, I was wondering about a retest of this low to set up a double bottom to take us back up into the highs, and we have that potential double bottom here. No current positive divergence. We shall see how it goes. All right, let's have a quick look at questions. Okay, cool. In that case, I think that is a wrap, in which case, everyone take care, and I'll catch you guys tomorrow morning. All right, cheers.